Hey, hello and good morning everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So, ladies and gentlemen, this is a quick video preview for the webinar, which is going to happen in a few moments, so do not tune out. We're going to talk markets, and there is plenty of things to talk about because, look, I mean, we have the US CPIs, we have the Bank of Canada interest rate decision coming up today as well. So yeah, a lot of stuff. And also, apart from that, geopolitical, well, tensions and maybe some resolutions, potential ones. Let's see how the market reacts to all that. And hey, stick around. Hopefully you'll enjoy the session. Do not forget to ask questions if you wish, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning everybody. Hi, my name is Darius Anucauskas and I'm a global market analyst here at Markets.com. So ladies and gentlemen, it is Wednesday. We're midweek. We do have a lot of developments happening. The markets are not really feeling very well. But look, about all that and a little bit more in a bit. Just first need to quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to sit around here. As always, I need to put the usual good morning in the chat room, ladies and gentlemen. Good, why is it not typing? So yes, good morning, everyone. I hope, like I said, everybody's having a wonderful start of Wednesday. Look, we still have kind of, half of a week to go. Look, also before we jump into the charts, the usual quick mentioning of our Markets.com website, which you can always check out for more information about us. Yep, if you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's jump into the markets. Now, let's see what's happening here. Okay. Nikkei 225, we did drop below that lower side of the range here. I talked about it. Currently, we're seeing a little bit of recovery, which is fine, which is kind of normal because, again, I think that there's some positivity coming in the world in general because due to some, peace talks about around the Ukraine war. Yep, maybe this is what all is, jumping in. However, tariffs, we saw aluminum tariffs kicking in right now. However, again, I think that there's going to be delays probably of some sort, they impose tariffs and then they delay. They impose tariffs and then they delay. So, at the moment it's just like a more of a word game. Certain tariffs are going ahead, but sometimes I think that everybody's already getting confused and getting lost in all the amount of these different tariffs which are coming out. So yeah, I think this is what people are kind of struggling to understand. Look, basically the official ones that took off, the 25 I'm reading right now, the 25% tariff on imports of steel and aluminum from all countries are taking effect from midnight Wednesday. Basically, it's from today. Canada and Mexico, they have the 25% tariffs, which went on March 4th. But then there's some sort of delays on certain issues. Chinese tariffs or products on China, also 10%, and then there is another increase on the Chinese imports for 20%. With the European Union, we're still kind of, on hold. So, look, because there's happening so much and there's so many different things happening, I think that the market is already getting confused. It's just that everybody's just what, let's sell and not really overthink this, and let's wait until we get some sort of more positive news. And at the moment I think that we're not getting that, and that's why the market is kind of feeling, or should I say, not feeling very well. Now, in case of Japanese Nikkei here, 225. So yes, in general, I'm trying to approach this, you know, with a cold head on my shoulders and trying to approach this from a let's say careful perspective, because again, you know, we might say, I might say that, look, oh, I think there could be a reversal or might not be a reversal, you know, but it's all really up in the air. So that's why I'm going with this one very slowly. And at the moment, what I'm looking at here, I'm looking at the technical picture. Yes, we do have these, you know, developments, these geopolitical developments, economic developments happening, but given that everything is on such a, you know, wavy motion right now, that it's really difficult to kind of really try to project or something. So this is where technical analysis comes in and helps us out, and this is what I'm looking at right now. And I'm looking at this little hurdle here, which I talked about previously. This was the lowest side, lower side of the this range that where we were trading in. So at the moment, leaning a little bit more towards the downside. So as long as we stay below that broken lower side of the range. In order for me to get comfortable with the upside, well, pretty straightforward. Look at this. I mean, this downside line taken from the high of the 24th of March is, I think it's perfect here, because again, it also is around near all my EMAs here on the daily chart. And if we do get a nice clearance of that, and we also pop above the 38,200 kind of 65, 70 zone here, then potentially more buyers here could join in. So basically, this is the point from where I will get a little bit more comfortable with some higher areas. Now, ladies and gentlemen, I hope you can hear me and see me well. Hope the sound is coming through well, because I keep on getting sometimes some errors. But hey, so as long as the ride is smooth, then you can hear me and see me well. So looking at the China 50 index very quickly here. So China 50 index is, I think it's one of the ones that, you know, one of those indices that are kind of holding off, you know, and I think that this is where, when I said before that, if you remember in the beginning of the month, I mean last month, I talked about this, that that there are investors, there are U.S. investors who are actually looking at, you know, investing into China rather than in the U.S., and this is where I think that this is where all the action is coming from now. And that's why we're not seeing really that much of a decline here in the China 50 index. So long story short, if you're looking for some higher levels on this one, well, my beloved technical analysis here kicks in perfectly, because look, we are stuck right now in this little box, right? Okay, we did violate the box through the lower side of it, but that's fine. We drifted lower, we tested some EMAs here, and we started bouncing back up. So, but still, I'm keeping an eye on the upper side of that box, which is not far from that 13,500 zone. So basically, long story short, if you're looking at some higher levels, in at least maybe in the medium term, well, wait for a break of that area, break of that 13,500 zone. If we can get that move, amazing. More buyers here could join in. In terms of economic news, economic developments from China, let me just bring China here. Oh, I think I have it here. There we go. So vehicle sales, we had like some kind of minor data coming out, you know. Oh, by the way, Japanese household spending, let me just double check. Oh, really bad. Right. Okay, so GDP also was on the yesterday it came out, yesterday growth rate final Q&Q. There we go. A better number than the previous, but the forecast didn't beat the forecast. Okay, that's absolutely fine. It's okay. Still not something tragic or something, you know, like really that the market should be afraid of. But yeah, look, in terms of Chinese data, no, that's it. The main one that we had, the most interesting one that we had was on Sunday with the CPIs, Chinese CPIs, which kind of came out on the much lower side. And yeah, I mean, this is where the market didn't really like that thing. It did initially decline, but then look, yesterday started correcting back up. So I think that, yes, I think that the Chinese market is showing some resilience, and I think that there could be some interesting moments here going further. Let's see what's happening with the US one. Well, Dow Jones Industrial Average, look at this. I mean, wow, this is spectacular. We broke the lower side of the range. I talked about it, and well, what can I say? It's showing. I have to stick to the downside scenario, to be honest, as long as we stay below the 41,700 zone. So if we do somehow climb back above the 200-day EMA, which is shown here as the white line, I will get a little bit more comfortable with the upside. However, at this point, it's very difficult to talk about the upside unless we start seeing some, some pauses in the tariffs, and yeah, I mean, only then we could get a little bit more excited with some upside. Maybe, the talk with the peace talks for the Ukraine conflict. Or around the Ukraine conflict, okay, that would be more beneficial for the European indices, but I'll get to those in a bit. But here and on the Dow, well, look, like I said, we're watching the CPIs today. Honestly, you have to keep an eye on the CPIs because this needs some sort of a boost back up. If the number comes out on the lower side, where's that economic calendar? If the number comes out a little bit on the lower side, where's the number? Oh, there we go. Then yes, look, maybe we could see some sort of a bounce back, because again, this would put the Fed closer to cutting 3 times by the end of this year, because at the moment that's the forecast, as you can see here. And right, let me just double check. Now we're okay. Now we have shifted 1, 2, 3. Yes. Okay. Sorry, I thought it was already 4. So no. So we could see 3 cuts. So at the moment, this percentage is kind of balancing around this 32.6, around a little bit above 30, basically. And yep, this is what's like I said, this is what's happening right now, and I think that if inflation continues to slide, then we could see this one pushing higher. Now, in general, you would say, okay, look, I mean, if inflation falls further down, then maybe we could see the index rebounding. But again, depends on how much it falls, because if it falls by just 1/10%. Okay, look, maybe, like I said, this is where we could see the index actually, U.S. indices reversing back up. But if it falls a little bit more, let's say maybe by 3 or 4/10%, that could actually spook maybe the market, because again, we need a little bit of inflation to show growth. So if it's totally falling, then it's a tricky moment there. Then this is the Fed. Then we could see the market sliding further, but then going into next week, we could see, let's say, when the Fed comes out with okay, they're not going to cut next week, but if they come out with the words that they're really strongly believe that they will be cutting and blah blah blah, and then this is where the stock market could reverse back up. So that's what I'm saying. So be careful what if we do see a lower, like I said, if we do see lower, much lower inflation, in a way, yes, that could prompt the Fed to go for more cuts. But if like I said, if it goes way too much to the downside, then like I said, it could actually spook the market. Yep, it could spook the market. So let's see what's gonna happen. At the moment, like I said, the forecast is for a drop by 0.1% on the headline and on the core as well. So yes, because okay, we got we saw oil, energy prices kind of drifting lower very heavily, and okay, we'll see how this inflation number comes out, because again, the tariffs, the tariff war did start, but did it have its effect in February much? Well, I don't know. In general, I'm kind of sticking to somewhere to the levels of, you know, of previous and forecast, to be honest. I'm not really expecting maybe a huge deviation. However, if we do get a huge deviation from these numbers, either to the upside or to the downside, now that's where the, like I said, the volatility could come in from. So yeah, we'll keep an eye on the core as well. That's quite important because again, the US is an economy of the service sector. We're heavily relies on the service sector. It's not a kind of a producing economy. Can I say? What can I say? It's for now. We are carefully monitoring that situation. We're also carefully monitoring the situation here on the indices. Look at the S&P. I mean, that one is just, you know, falling apart in a way. So in a way, if you're looking for a good target, 5,384.85 zone becomes quite an interesting one because that's the lowest point of September of 2024. Still some room here to go. In general, let's have a look how much have we fallen since the peak, since peaking here back in mid-February. And look at this, we have fallen around 9%, like almost 10%. At one point, well, basically around 9% we have dropped. So that's on the S&P 500. I mean, another, 20%, and that's like a recession. So basically, if we start falling somewhere to this area, I mean, this is wow. This is like very, very interesting because let's look at in 2024, where is that beginning of the year? January, there we go. So somewhere around here, if I'm not mistaken. Yep. So basically in January, in 2024, the whole year we have done something around here, right? So this is how much we've gained. We've gained around 24% on this one, and then now we're kind of already wiping off. I mean, I'm not saying we wiped off half of it, but if you shift this level here to this point, then you'll actually see that we wiped out like half of it. But okay, we're not looking at this one this way. We're at the moment, let's just make our life more simple, and let's keep an eye on this little hurdle. Let's see if we can actually get a move back up here. There we go. So yeah, just a sec, there we go. So basically for us to start considering the upside scenario in this one, again, look, I'm going to take a very conservative approach here, and I would prefer to wait for a push back above the 200-day EMA and the 5,700 kind of 69.70 zone. I think that would be quite logical here, and I think that this is something that would appeal to more bulls. But while we remain below all the EMAs, I mean, any pullback towards the 200-day EMA could be classed as a temporary correction before another possible leg of selling. In Nasdaq, I mean, again, technology. Look, I talked about this 23.6 target here. Amazing, good reach, good test. We're currently testing this area. Now the question is, can we go towards that 38.2? I mean, that would be a spectacular decline, honestly. In general, if you're looking at these companies are not feeling very well. NVIDIA, Microsoft, let's have a look at this one. Google as well. Everybody's on a decline. I mean, and the thing is that everybody's thinking, okay, is this the perfect opportunity to buy? Well, in general, because we're having so much talks about the recession, about everything, I would say I would wait a little bit more. I'm not saying not to buy or something like that, but look, it really depends on you, what you're comfortable with. But whenever I see like something like this, and now I see like this more uncertainty, and the interest in the tech sector is kind of fading away, so I want to leave it, for now a little bit. I think that other sectors are doing quite better as well. So let's see what's happening with CVX. This one's still holding on, the energy. So Dominion Energy, I think, yes, that one's still holding. So the energy sector is still holding on despite oil, let's say, you know, drifting lower. But natural gas is, of course, is exploding to the upside. But I'll get to that in a bit. So coming back to this situation here, let's have a look at the dollar index. And the dollar index, I mean, this has fallen quite significantly. Look at this. If I would draw my Fibonacci from this level here, the lowest point of September of 2024 to the highest point of January of 2025, look at this. We reached the 70.5% here. Amazing. Done. It's beautiful. Now the question is, can we get a rebound? Well, to be honest, something tells me that maybe, just maybe, we could get that little rebound today. And today is a perfect opportunity to do so. But for this rebound to happen, what I would like to see here is, I would like to see the inflation number coming out. Like I said, if it comes out as previous, I think that's good. This could play out positively for the US dollar. But again, we'll see if it comes out, you know, much higher than the previous. You know what? Okay, with the US dollar, I think that could still play out positively for it and for this index, and we could see a nice rebound. In general, everybody's hoping to see some sort of a correction back up, and today, well, today is kind of a perfect day to do so. So let's see if that's going to happen. I'll jump into the some dollar pairs in a bit. But first, I want to pick up on another index, and that's the German index. Look, the German DAX. Let me just clear up the chart here a little bit. So what we're seeing right now, we're seeing a bit of a retracement of some sort. Like here, I'm looking at the daily chart, by the way. So after we had a good, you know, hit of the all-time high here, we started reversing back down. We reversed back down, we drifted lower, but we are still above this 22,116 zone. So in general, yes, there is some positivity around in the market because again, this whole peace talks with the Ukraine, that could be working out nicely for the market. But what can I say? At the moment, there's still more developments need to come through, you know, like in order for us to get really comfortable with this idea. For now, I'm just cautiously bearish. I'm keeping an eye on this little hurdle. This where's the arrow? There we go. So I'm cautiously bearish, and but I'm going to get more bearish if we get a drop below this territory, below that 22,116 zone, and then we'll go from there. Very quickly on UK, fantastic reach of the 100-day EMA. I talked about it. Mission accomplished. I'm very, very happy with this. So this worked out beautifully. What's next? Next, we remove all the drawings and start fresh. Of course, I'm going to bring a few lines back here on the chart, but I think the main focus right now is if we do pop back above the 8,610 zone, I will consider a move higher. Yep, I will consider a move higher. I will consider a move somewhere towards these areas here, the 8,837 or 8,909 zone. But again, for that, I need a stronger reversal back above the 8,610 zone. If we start falling below the 100-day EMA, well, guess what? I'm going to lean more towards the downside, towards the 200-day EMA. Let's jump into the Forex world. AUDUSD. Okay, this one's stuck, and you understand why, probably. It's stuck because of the we're waiting for the CPIs, for the US CPIs. So we need a nice clearance of the 0.6330, and yep, this can be done here very quickly. So if we can clear the 0.6330, then yes, wonderful. I think I'm going to get a little bit more comfortable with the upside. Certainly, there's another obstacle in the way here, this 0.6408, which is the highest point of February. But then after that, we have the 200-day EMA. So in a way, there's a lot of ifs. First, we clear the 0.6330. Then we have to look at what's going to happen with the 100-day EMA, because we cannot ignore that. It has played a good role of resistance. And if that gets cleared, then is another target. And look, there's a lot of ifs, as you can see yourselves, but hey, if it works out nicely, then it works out nicely. For the downside, a drop below the 0.6186 here is required. In general, of course, let's not forget that yes, we have, the RBA, which is coming up in the beginning of April, but that is still half a month away. So let's, for now, let's focus on the what's more relevant, what kind of data we're getting right now. AUDJPY, just a quick update. Okay, we're getting a nice hold up here below, above this 91.85 zone. So if we can get a nice clearance of it, I'll go further south. At this point, we're seeing a bit of retracement, a little bit of a correction back up, so that's fine. However, my upside scenario is preferably on a break of this downside line and a break of this 50-day EMA. NZD USD very quickly, so similar story as with the AUDUSD, and for this one I'm actually waiting for a break above this hurdle, above this 0.5771 zone. If we can get a nice clearance of that, then amazing. More buyers here could join in. For the downside, a drop below somewhere this area would be nice. However, from the very short-term perspective, to be honest, maybe actually a drop below yesterday's low could do the trick. The 0.5677 zone here could be cleared, and if we can clear that one, amazing. More sellers here could join in. US dollar against the Japanese yen, looking good, and we are seeing here a nice kind of rebound from the 147.20 zone. We had a few false breakouts, that's fine. So basically this becomes our kind of barrier for the downside. If we can get a nice clearance again below that, we could see some lower levels. But at the moment we're testing this this area which I looked at before. Previously it was a good area of support. Now it's the area of resistance. Now, if we stay below that area, I would say it's good. Like I said, there is a good chance that the bears could take advantage of the higher rate and and kind of jump into this one. For the upside, very straightforward. A break of this downside line is required in order to go higher. Now, USDCAD. Now, something that probably everybody will be, whoever's trading, something Canadian dollar related, will be looking at. So for this one, we have the interest rate decision today, right? Okay, another expectation of a 25 basis point cut. That's fine. We could see this one, like I said, devaluating further despite the US dollar, weakness, because again, the Canadian dollar right now is not on the stronger side, and of course, the potential cut from the BoC is not something that the CAD bulls would like to see, but it is how it is. I would say, they're going to go for another cut because they want to support the economy, because with all this tariff thing, and I think that yes, they're staying strong, but I think that there is still an issue. Still they need to support the economy, because again, it's like I said, it's a numbers game, and still there are issues, like I said. And at the moment, I think that it's better to sacrifice the currency in a way a little bit, rather than not to stimulate the the business environment, the economy, with lower rates. So that's what probably the logic is. We might see, like I said, we might see this one popping further north, especially if we clear some of these key areas of resistance. I talked about this 1.4466 is the one that I'm watching. If we can get a nice clearance of that one, I'm going to go higher towards the 1.4543, and if that, and so on and so on. So for now, that's my game plan. US dollar against the Swiss franc. US dollar against the Swiss franc. I would say right. It's like I said, it's moving in a similar fashion with the DXY. However, this one's it seems like it's one step, further. We're seeing a little bit of retracement. We have not seen that much retracement in the DXY. But again, I'm not saying that I'm getting very bullish or something like that. No, for me, I still need to see a pop back above the 0 point, this one right there. Let me just put it on the chart. So I need to see a push back above the 0.8870 zone in order to go higher. For the downside, pretty straightforward. I think that it's dropped below this hurdle, the 0.8757. If we can get that move, amazing, a forthcoming lower low will be confirmed. Now then, ladies and gentlemen, Euro USD for those who who enjoyed the ride here. I talked about this. This was my target, the 1.0936. I said to you, keep your eyes on it. That's the highest point of November, or near the highest point of November of last year. And there we go. We got the hold up. We're getting, now the question is, can we see the dollar strengthening a little bit so that we could see a little bit of a correction back down? Well, let's not rush into things. Let's wait for the CPIs, and then we'll go from there. Because if it doesn't, if the dollar continues to slide, I mean, look, Euro USD has a good opportunity to go and test this downside line here, taken from the high of the 18th of July. EUROJPY very quickly, pushing nicely to the upside. Yes, clearing some of my barriers. It cleared all my EMAs. I talked about this on Monday as well. I said to you, look, maybe we're forming a nice bullish flag. Well, there we go. And then we've popped, we tested the 200-day EMA together with this steeper downside line taken from the highest point of July of 2024. And now we're on track to potentially test the this flatter downside line taken from the high of the 31st of October. And then we'll go from there. GBPUSD slowly grinding higher, slowly, it's not without any really major fireworks, just slowly grinding higher. But then the question is, can we actually end up traveling to that 70.50% here on the Fibonacci retracement, which is roughly around the 1.3040 zone? But let's not forget that we still need to test the psychological 130 zone. So, that's still on the table, and still we're not far. Yesterday we kind of came closer, I would say, not close but closer, but still nowhere there. We're currently resting on the 61.8 here % on the Fibonacci retracement. Let's see if we can stay above that area. If we can, I'm leaning still towards that 1.30 zone. I'm not saying that this, if the US dollar strengthens, that this will continue pushing higher, but I think that what can happen, that we could test the the 1.30 zone, just have a quick test, and then when the CPIs come out, maybe if the US dollar starts picking up interest, then we could see a drift back down. Right, ladies and gentlemen, gold. Gold is very, very interesting at the moment, and we are, look, I talked about this, and this is what I'm going to say. Currently, we're stuck in this little range, roughly between the 2,885 and 2,930. We're stuck in this beautiful range, or some of you might like to say we're stuck in a little box, and that's all fine. That's all good. Actually, on the contrary, for me, I actually like this right now, because it's a very tight box, and what we can do here, we can see a better breakout at some point. So if we do pop above the 2,930 zone, that's great, that's wonderful. We could see some higher levels, but for the downside, a drop below the 2,885, I think that could open the door to some lower levels. So at this point, if you're not really comfortable with this, I totally understand you, because again, we need some sort of clarity, and at the moment we're not maybe getting that clarity, and instead we're just stuck in this little range. On a weekly chart, as you just saw, it's just a small bodied candle. Maybe, like I said, maybe the second half of the week could be a little bit more interesting for gold traders, for both actually, for the bulls and the sellers. Silver, beautiful pop. There we go. Mission accomplished. We tested my downside line taken from the high of the 23rd of October. Okay, great, wonderful. What can I say? If we do remain above this downside line, then yes, my next target is the 33.38 zone. If that gets cleared, a forthcoming higher high will be confirmed. So at this point, yes, we're testing the downside line. It's wonderful to see, like I said, that it's working out nicely, but can we clear that? If we cannot clear that, I'm not going to say that I'm going to become very bearish. No, I'm going to become a little bit more bearish if we do start falling back below the 50-day EMA. WTI oil. WTI oil is at an interesting spot here. Yes, we are, right now, what I'm looking at here is we're stuck in this little area between the 67 zone and the 65 area dollar. So the 67 and the $65 mark. So, we're stuck in that little area, and if I'm looking at some higher levels, then a break of this downside line is required. For the if we're looking for the upside, sorry, if we're looking for an upside, a break of this downside line is required. If we're looking for a downside move at this point, I know I talked about this potential idea of a retracement here, and we still could see that, but you know what, for me to get a little bit more comfortable with the downside, I just would prefer to wait for a drop below the $65 mark, and then we'll go from there. Natural gas, let's have a look at this one. Look at this. Oh my God, look at this. I mean, this is amazing. Beautiful pop here, beautiful move to the upside initially, and then we stopped near this area, just slightly below the psychological $5 mark, and drifted back down. But most importantly, we drifted back below this hurdle, this one that I talked about previously. This is the high of the, or should I say the high of the 20th of February, or should I say the highest point of February. So we kind of we're struggling to remain above that area. As you can see clearly this on the monthly chart. So if we're interested in, you know, further advances, then certainly a push above that highest point of February is required. Coffee. Beautiful rebound. I mean, I'm loving this chart here. It's very, very technical. This upside line so far is doing a wonderful job. So we're seeing a nice rebound. Look, I will say it this way. While we remain above this upside line, but below this 411 zone, I'm just observing the price action. It seems like it wants to form something of a, you know, ascending triangle pattern, but, you know, either way, a break of that 411 zone is needed for me. And let's jump into sugar very quickly. Sugar, beautiful push again to the upside. Good test of this little hurdle, this 19 zone. Absolutely fine, absolutely good. Now the question is, you know, where we'll go next. I mean, for me, again, I said it before, a break of this downside line, which is a little bit on the tentative side, don't get me wrong. But if you're not really comfortable with that, I would say wait for at least a push back above the psychological $20 mark, and then we could go from there. Let's jump into the crypto world, ladies and gentlemen. Bitcoin. Bitcoin is at an interesting spot. So basically we're oscillating around the 200-day EMA right now, which is shown as the white line on my chart. We're oscillating here, so it's not really neither a bull or bear's game. And at the moment we're waiting to see some sort of, like, you know, clarity here. So I'm still kind of aiming for my lower levels here, but for those I need to see a drop back below the 200-day EMA. If we can get that move, amazing. I will consider some lower levels. For the upside, I'm pretty strict on this one, to be honest. I'm waiting for a push at least back above the 90,000 mark, at least, you know, above that, in order to get comfortable with some higher levels, because all this area here could be just, you know, volatile, way too volatile, could be up and down a little bit. So not something that I'm really a big fan of. Bitcoin Cash. Now, I threw out a piece yesterday on Bitcoin Cash, and I do like this idea because it's showing still resilience, you know. So unlike other cryptos, which are kind of, you know, going for lower lows, this one is actually going for, it's maybe not going for a higher high, but it's not really going for a lower low as well. Instead, it's going for a higher low, and that kind of, you know, that gives me a bit of reassurance, not, I wouldn't say reassurance, but a little bit more positivity around, you know, that not everything is lost in the crypto world still. But maybe, you know, we're just seeing a nice little correction right now. So, you know, for now, the Bitcoin Cash is at an interesting spot. So let's see if we can hold here above the, you know, these two trend lines. If we can, amazing. I will consider a move back up. Ethereum is also very interesting here. We broke below the 2,119 area. That's great. That's fine. But we're holding around this 1,800 zone. We tested that area. I was aiming for that. But I would prefer to actually, you know, continue aiming to the downside, to be honest, because look, if we do fall below again, below the 1,900 again, I'm leaning towards the downside. I'm leaning for that 1,500 zone. For the upside, well, the first step for higher levels could be a push back above the 2,119 area. However, am I going to get very comfortable and very bullish with this one? Not really, because we still have this downside line taken from the high of the 16th of December. We need a clearance of that downside line in order to go higher. At this point, I'm just observing the price action. Ripple is, yeah, it's also like on a roller coaster ride right now. We're oscillating around the 100-day EMA, pretty straightforward. The drop below the 100-day EMA, it's gonna start helping me to consider lower levels. Let's put it this way. For the upside, now that's my problem. I mean, ideally I would prefer the break of this downside line, but I do understand there's a lot of area to be missed. So what we can do here is maybe we can keep an eye on this 50-day EMA. If we can push above it, maybe we could see a nice, you know, a nice move higher. Let's jump into Litecoin. So Litecoin, okay, what can I say here? We fell below the 200-day EMA. Litecoin is one of my favorite ones, and we fell below the 200-day EMA. Some might say, hey, it's a great opportunity, you know, to step in, but look, from the technical perspective, we could, of course, rebound. We have, you know, rebounded from this upside line, which is fine. But we're very close still to it, and if we start clearing it and we fall below the current lowest point of this week, I would say, or this month, which is around the 82.95 zone, then yep, this is where it could start to become, you know, a little bit more ugly for the bulls. Very quickly on Dogecoin, let's see what's happening here. Oh, we violated the lower side of the falling channel, and but we violated it. We tested the 0.1416 area, and then we drifted back up again, back inside the falling channel. So it kind of gives us a little bit of a, you know, a little bit of positivity in terms of that maybe, you know, right now we will be, or we could be, not will be, but we could be seeing, you know, a nice rebound back up. So basically, in general, mission has been accomplished because I was targeting the lower side of the falling channel. That's fine. Now the question is, if we can stay above the lower side of the falling channel, can we make our move back to the midpoint of this falling channel, which has been in play for from around the beginning of December. And finally, Polkadot continues to bounce around that psychological 4 level, but at the same time, it remains above this area, which I talked about recently on Monday, above this 3.57, 3.75 zone. So look, if you're a bear, wait for a drop below this area. If you're a bull, I would say this, you know, for now it's a little bit tricky with the upside. Maybe you could start, you know, shifting your attention to some of these levels. For example, if we do jump back above the 4.10 area, this might attract a few more buyers. Who knows? But still, still there's a lot of uncertainty. But look, we could try to play this game this way. You know, if we do pop back above the 4.10 and we stay above it, then I will consider a move back towards the 4.62 and then maybe this 5.23 zone as well. So yeah, could be the nice good area. So, ladies and gentlemen, that's kind of it for this session. So, I hope you found it useful. Thank you very much for tuning in. I really appreciate your time, your views, your likes, your comments, everything. I really appreciate that. So, hey, look, feel free to ask questions always. I mean, that's why we're here. That's why we're running this show. We're trying to understand, you know, what's happening with the markets on a daily basis in a way. So, hey, yes. I hope you will join me on Friday, 8 o'clock GMT time, 10 o'clock GMT +2. So yes, hopefully you'll enjoy that session. We're gonna wrap up the week, and we'll go from there. So ladies and gentlemen, thank you very much, and I'll see you later. Bye bye.